Season's greetings, everybody. Welcome to our final episode of Mining Stock Daily for 2025, and it's going to be a good one. We've got a long forum discussion with our friend Brent Johnson of Santiago Capital, talking about how the mining industry in North America, specifically the United States, is benefiting from a renewed industrial policy. Also, what are the challenges moving ahead with that policy? Great conversation with Brent, as always, and we take a deep dive within the structural framework and then also the Office of Strategic Capital, which he has written about. So I recommend listening to it in its entirety, as there's a lot to take in as we begin to wrap up the year. Special thank you to Vizsla Silver, Revival Gold, Integra Resources, and Equinox Gold for the continued support of Mining Stock Daily throughout the year, along with our other partners that we have continued to cover throughout 2025. We're going to get into this conversation with Brent, and then I will be back at the end of it for kind of a holiday nightcap, I guess you could say, and a special poem I wrote for everybody talking about this year in the mining sector. Let's jump into that conversation with Brent. Stay tuned, everybody. Have a wonderful hour listening to my in-depth conversation with Santiago Capital's Brent Johnson. All right, everybody, welcome into our final episode and therefore our final long-form episode of 2025 as we get into the holiday season, and we will be off for the next couple weeks and back in early January. It has been an incredible year, one to where whatever markets you were dabbling in, whether it be the mining and resource markets or maybe even trying to ride the wave in tech stocks, it has been a very interesting and exceptionally volatile year. And so we're going to welcome back one of my good friends in this market, and again, one of my favorite Nebraskans of all time, Mr. Brent Johnson from Santiago Capital. Brent, good to see you. Season's greetings. How have you been?
Good. Thank you. Thank you for having me. It's good to talk to you.
Yeah. Listen, I asked you on because there's a lot to talk about. It's hard to cover this full year of events, and really looking forward into 2026 in the next 60 minutes or so. But I think what's important to know that you sit comfortably, I might add, in this area of capital flows, geopolitics, monetary plumbing, and you do it with ease and grace. And at least I'd like to think you do it with ease and grace. So I want to try to put this all together. If we take a step back and think about the last 12 months, what are a few things that really come to mind that were pivotal for your philosophy and your framework?
Well, I think the biggest thing to understand, and there's so many things that flow from this, but the single biggest thing that I have seen over the last 12 months is that Trump has essentially dismantled the rules-based order. And the rules-based order, you may have heard that, in different, interviews that you've listened to or papers that you've read. And it really is a real thing that the Allied powers put in place post World War II. And it was a system used to, quote unquote, govern how the world would be run in the decades ahead. And that lasted for probably 30 or 40 years. It took a little bit of a hit when the United States removed the dollar from the gold standard in the 70s. But other than that, the framework largely held for the next 30, 40 years. But Trump has done more to remove that rules-based order in, 12 months than the BRICS have done in 12 years. And what I mean by that is he has removed all of the globalist tendencies, I guess if that's the way we want to say it, that the rules-based order put in place for the greater good of the global economy or the global citizenry, however you want to think about that. And he has unapologetically said, we are no longer doing it for the greater good. Anything we do is going to be for the benefit of the United States. Now, the ironic thing about that is that the rules-based order greatly benefited the United States in many ways. Now, it did expose the United States to some downsides as well. And we just kind of finally got to a point where I think the populace was demanding And that is why Trump came into power. He was a response to what I would say, the citizenry largely wanted from an economic perspective. He came in and is putting the U.S. needs first. Now, whether that's a good thing or a bad thing, you're going to have to decide that for yourself. But the fact that he is doing it is pretty much undeniable at this point. And so it's kind of a brave new world that we find ourselves in. And it has huge impact on markets. It has huge impact on asset classes. And for someone like me who kind of sits at the intersection of this, as you said, the geopolitics and capital flows, it's just fascinating.
It's with all this, there's so many areas, so many corners that we can dive into, but let's think of it holistically. So between deglobalization, a America First industrial policy, and I guess geopolitics, and maybe even potentially war, which kind of feels like we're heading in that direction. It also comes with rising debt. So it feels like we're no longer in this like traditional economic cycle. We're in something late stage and almost structural. Do you agree that we are in a different regime altogether? And was this regime change cyclically going to happen with or without Trump?
So yeah, the short answer is yes. I do think that this is where we're at. We are at this place from a very large social perspective, from a debt perspective, an economics perspective, from a geopolitics perspective. Like the pendulum was swinging towards globalization for 30 or 40 years, and I think COVID was kind of a bell at the top in many ways of globalization, and now the pendulum has started swinging the other way. I think that a lot of the things that are happening would be happening even if Trump wasn't president. They might not be happening at the same speed. They might not be happening in the same fashion, but I think largely the same dynamics would be at play. Trump just kind of happens to be a very unique individual. And again, whether you like Trump or hate Trump, it doesn't really matter. Like the fact is he's a very unique individual. And he is making his mark on the global stage. And some people would argue this is for good, and some people would argue it's for bad. But the impact is in my opinion, undeniable. And I think, regardless of whether the Republicans maintain kind of power in Washington or the midterms change this, again, I think this is the way the pendulum is swinging. And while it will matter on certain details, on the big picture, I'm not sure it matters a whole lot.
So if this global regime shift is happening, what do you think is the most misunderstood aspect of this by investors today?
So for me, the biggest mistake is when people look at the United States. They look at all the mistakes the United States has made. You look at all the bad policies they put in place. You look at, I would argue, some of the ways that people do not like what Trump is doing, and so therefore are pulling back from relationships with the United States. I think people look at all those things and then say the United States cannot possibly come out on top in this global conflict, or whatever we want to describe this as. I think there's this common belief that America is inevitably going to lose this conflict. It's going to lose its place in the world. And as a result, you need to get out of U.S. assets. You need to get out of the U.S. dollar. There's better opportunities abroad, and it's just a matter of time. And so you better get on board, or else your assets are going to be, flittered away. And I actually think that is wrong. I think that's wrong for a number of reasons. I do think that the United States has made a lot of mistakes. I do think that we are going to pay for them. But I think the U.S. paying for those mistakes has enormous impact on the rest of the world. And despite all the problems, if I look at the world as a chessboard or a game board, and I have to put my assets and plant a flag in one place and say, this is the area that I think is going to do best compared to all the others, I still think the United States comes out ahead in that. Now, perhaps it won't work the same way it used to work. Perhaps it might not be done in the same efficiency or in the same ease that it used to be, but I still think largely the United States provides the best opportunities for an investor. And I struggle, if it's not the United States, I struggle to find a place in the world where I would feel comfortable sending assets with the idea that they're going to sit there for the next 5 years. And I will be able to repatriate them after that 5 years, and they will be much higher than they are today. Now, I want to be clear. This is not to say that the U.S. is a great opportunity right now, but on a relative basis, I don't know where I would rather be. And for a number of reasons, as I mentioned earlier, the rules-based order was kind of set up to favor the United States. And even though Trump is bringing it down, several of those advantages still exist. And then when you put on top of it that the United States is being decidedly pro-American right now, and you could argue that in many ways the game is rigged in their favor. Again, I'm not going to bet against the rigged outcome, or I don't feel comfortable betting against this rigged outcome, especially when I understand all of the resources the United States can bring to bear if they choose to focus on the United States, or if they choose to have a conflict with some entity abroad. Again, on a relative basis, I don't know who I would want to bet on against the United States. And so when I look at the world and decide where I'm going to invest client assets, the answer has inevitably come down to the United States or North America. And I think that will continue to be the case for the years ahead.
How do you balance that thesis with a continued erosion of the U.S. institutions, government institutions, along with erosion of a Federal Reserve, quote unquote, independence, and really maybe a concern about serious debasement of the U.S. dollar and our global currency? How do you balance all this in the long term?
Well, it's not easy. But again, and so this is, again, I'm not saying that this is going to be easy. By no means do I think this is going to be a smooth ride. And it's not that I think that, further mistakes can't be made. I actually think that they will be further mistakes be made. But I'll give you an example. Where we're going to end up eventually is not necessarily the same place we're going to be a year from now or 2 years from now. So as an example, the U.S. is unquestionably becoming, from a government perspective, is unquestionably becoming more involved in markets, right? And I would argue we haven't had free markets for a very long time, but we're moving in the direction of even more centrally planned markets. And I think ultimately that ends very, very badly. But that doesn't mean it can't have a positive impact in the short to medium term. In other words, if the United States government is going to plow trillions of dollars into national defense, which I believe they're going to do, I believe asset prices in the national defense industry are going to go higher. Now, and there's a way that you can benefit from that. Now, perhaps people don't like that. We shouldn't be warmongers, and we don't want to be, encouraging the buildup of military capabilities. And I get that. But at the same time, that is an opportunity that's going to take place. You could say the same thing for, other industries, whether it's the AI industry. We're in a race with China of who's going to win the AI arms race. I think the United States is going to do everything they can in their power to win that race. And I think that's going to provide investment opportunities. Same thing from, let's take it from a natural resource perspective. For a number of years, the United States has kind of been behind the eight ball due to government regulations, environmental concerns, green policies, however you want to define the headwinds to natural resources. But I would argue that many of those, or at least some of those, are going to fall by the wayside due to national security concerns and because of national interest needs that the United States needs to become self-sufficient. So I think that will provide opportunities in the natural resource space, whether it's energy, whether it's rare earth minerals, whether it's gold and silver. I think there's a lot of opportunities that will take place in North America that perhaps didn't take place over the last few decades that will now take place due to national security concerns. And those national security concerns will, pardon the pun, trump the environmental concerns. And so that's what I mean when I say that while it might not end well, governments getting more involved in markets, many years down the road, it doesn't mean that it can't be a tailwind in the short to medium term.
You've done a lot of writing on this. Specifically, there was a long note you published, I think it was about a month ago, on the Office of Strategic Capital, or OSC. This was something new to me, so it really caught my attention. I did a little bit further kind of digging just on my own, which the OSC wasn't anything kind of new under Trump. It's been around for a little bit. In fact, the Biden administration did a little bit of work with and under their Inflation Reduction Act type of framework. But it seemed like it really was thrusted into priority policy under this Trump 2.0 administration. Really what it is, it allows the U.S. government to begin financing, reshoring, remilitarizing supply chains, and doing so under a strategic, allocation. And from your perspective, is this more about national security, which I believe it is, and I think you just answered that, but is it an admission that free market capital allocation is no longer working in the strategic materials sector?
So I think it's a little bit of both. I think for many years there was let's call it a vocal minority saying, hey, we are way too dependent upon China for needed inputs in our industries. And I would argue that COVID kind of laid that bare and no longer made it much of a debate. It made it very clear that the United States is dependent upon China for some needed inputs. And, the Office of Strategic Capital, as you noted, it was actually a Biden administration creation. And it sits within the Pentagon. So it's within the Department of Defense, which is now called the Department of War. And the fact that they renamed it the Department of War, I think, provides a little signal value of how seriously they are taking this. And the fact that the Office of Strategic Capital sits within the Department of War, I think, should provide a little signal value as well. This is in many ways a 21st century Manhattan Project. COVID very clearly showed that the United States is too dependent upon China. And on both sides of the aisle now, Washington realizes this is a problem that must be solved. This has become an existential issue. Now, whether you think it should be or shouldn't be, again, I always say it doesn't matter what we believe it should or shouldn't be. This is how the people in charge are viewing things. And so from a national security perspective, they have identified like 20 or 30 different market segments or industries that they need to develop in order to become self-sufficient and no longer reliant upon a hostile nation, let's just call it China. And this is the weaponization of capital. This is the United States saying, listen, we are the global hegemon. We are still the biggest economy in the world. And if we focus our efforts, we can compete with anybody. Now, to your point, China hasn't had many of the quote unquote free market I don't know if you want to call them advantages or disadvantages, but characteristics of their economy. And they have focused on things like this for a long time, which is why, in many ways, they are ahead of us with regard to this. And so I don't know if it's fair to say that it's proving that free markets don't work, but I think it's extremely fair to say that the government isn't going to take that chance. Right?
Well,
they're going to do whatever they need to do to compete in this area.
Well, and maybe the better question is, if we're talking about remilitarizing supply chains from the foundation of natural resources, so obviously rare earths have had a huge cycle in 2025. We've talked a lot about copper, some uranium, defense metals. I mean, maybe the better question is, Brent, if these markets, are they effective without state sponsorship? And is this state sponsorship? Because it certainly feels like it is. It feels like a lot of direct planning.
I think it is without question state sponsorship. And I think it's going to increase even more. And so I'm a free markets guy. I don't really like this. I would prefer that the free market would figure all this stuff out. but I'm also a realist. And the reality is we don't have a free market, and we're not going to have one. And this kind of goes back to what I was saying earlier. The state sponsorship of certain industries is going to provide opportunities for investors. And my job is to grow investor portfolios. My job is not really to pontificate upon economic policy of what should or shouldn't be and whether this is the right path for us to take. My job is to kind of analyze the situation as it is and increase the size of investor portfolios. And so I think this is an incredible opportunity for both investors and the United States as a whole to become more self-sufficient and self-reliant than we are now. See, I already believe that on an overall basis, the United States is more self-sufficient than any other country. And that doesn't mean perfectly self-sufficient, and it doesn't mean there's not problems that we need to solve, but I feel like we have enough resources and we have the geography and we have the power to become more self-sufficient than we are now. And I think by doing that, it helps to solve many of the problems that Main Street has had to deal with, whether it's the loss of jobs, whether it's stagnant wages, whether it's increased cost of needed services because of the welfare state. I don't think that we necessarily have a perfect plan to solve all this, but I do believe that it needed to happen. And I think that we're in the process of trying to solve many of these problems.
The big phrase from the great financial crisis and saving the banks was they were too big to fail, right? And in this sector today, with the amount of capital, federal capital that's come into, MP Materials, or Lithium Americas, like projects that have bankrupted companies, more than once. And even those companies under previous ownerships, those ownerships that took on different projects and are yet to find something that is proven to be economic, but because of the intricate nature of what they're looking for, they're not too big to fail. They're too important for the government to fail. And it almost seems like we're bailing this stuff out on so many different levels because the input is so much more important than the economics itself. It's structural in nature, but it's interesting. So like previous companies that have failed that cost of capital test, now it doesn't really matter anymore. And I feel like this is going to be, not anytime soon, but we talked about the U.S. making a lot of big mistakes and it's going to come home to roost. I just kind of wonder if sometime, probably in the distant future, if this is going to be one of them.
Well, I think it is. So to be clear, I think that's where this ends up. It ends up with very inefficient markets and high cost markets because government is horrible at allocating capital. This has been proven time and time and time again, which is why I'm a free market guy. But again, governments are a fact of life, whether I want them to be or not. We are at this point in history where many countries are, quote unquote, in trouble from an economic perspective. Everybody is dealing with too much debt, whether it's the United States, whether it's China, whether it's Europe, whether it's, Australia, Canada, everybody has borrowed, and they did it when interest rates were at zero. And now that interest rates are higher, everybody is struggling with these. And so as a result, governments are going to enforce things rather than shy away and say, it's our fault, we caused it, so we'll let the market figure it out. They're never going to do that. I wish they would, but they're not going to do that. And so I think we're at a point in history now where, unfortunately, evaluating the success or failure of an economic project is going to be much different in the next 10 years than it was over the last 10 or 15 years. And what I mean by that is for most of my career, which, God, I'm getting old, it's 25 years now, used to be able to look at an economic project, and if it penciled out on a spreadsheet, you could kind of say yes or no to it. But I think we're in an area now, which you've kind of alluded to, that things are going to happen not because they make sense on a spreadsheet, but because the government wants them to, right? Mm-hmm. And so there's going to be projects that should never succeed that will, and there's going to be projects that should succeed but won't, because they won't get the necessary capital allocated to them, or it'll get allocated to a more important national security project. And so I think it's going to create winners and losers. And the challenge for people like me is to continue doing our free market economic analysis, but also having a new lens to put on top of it, which was one based on geopolitics, national interest, and perhaps national security. Because I think this is a wave that is going to last a while. In other words, I don't think that this is something that's going to last 3, 4, 5 months and then go by the wayside. I think this is going to last a decade or two. And how it shakes out exactly, I don't know, but I think it's going to create both chaos and opportunity.
I've been thinking about what could go wrong, and the timing has been set up. And I hope people listening to this, what I'm about to say, they're not going to throw me under the bus or be upset. But I'm just now reading Friedrich Hayek's The Road to Serfdom. Ben Hunt finally kind of convinced me this year that that's probably something I should do. So I'm reading this, right, and I'm trying. And I come from this mining sector, and watching all the policies and decision making coming out from Washington D.C. now, and I'm just seeing so many linkages to be made. So Hayek, he warned that once the state directs capital in the name of necessity, it rarely gives that power back. Right. So do you think the strategic industrial policy we see now is a temporary response or a permanent shift in how capital will be allocated in the long term, hence negating free markets, capitalism, and potentially even democracy itself?
I think it's probably a permanent thing. And I think this is the trend for the next several decades, which will end badly. And we will have some big event decades down the road that will then start the pendulum swinging the other way. But I think the pendulum has just started to swing in this direction. And I think it has a long way to go. So this is why I say I don't like this. I don't prefer that this is the method that things are going. But if I just step back dispassionately, just analyze the situation objectively, this is where things are headed, whether I want them to be or not. And the other thing I would say is, if you take this lens that this is bad and there are going to be negative consequences of this, I completely agree with you. But I would remind you that you need to take that same level of skepticism and apply it to Brazil, and apply it to Russia, and apply it to Europe, and apply it to China, because they're doing the same thing. It's not like they are bastions of free market capitalism and allocating assets perfectly, while the United States is now reverting towards, centralized authority. It's the United States reacting more like Russia would, or reacting more like China would, or reacting more like Brazil would, that is the change. And so if you're skeptical of government ability to do this in the United States, I'm with you. But held that same level of skepticism when you look at China and Russia and the rest of them.
This is all happening, what I think you and I would both agree, very late in the cycle. Probably what Ray Dalio would call late in the big debt cycle. But so there's going to be, and there continues to be, big decisions to be made on how to handle this late stage debt cycle. So with that in the backdrop, how does something like this strategic reindustrialized policy, how does it get funded at the same time managing a debt structure?
Yeah. So I will say the one thing that I like about the way the United States is going about this is it is a public-private partnership. It is not just another government program where some career bureaucrat has been allocated $100 billion and they just go hand it out to their friends. So the way it works is the Office of Strategic Capital is headed by a guy named Steve Feinberg. So Steve Feinberg was the founder and chairman of a company called Cerberus, which is one of the biggest and most successful private equity firms in history. And so he made billions of dollars for both him and his clients in the private market, allocating capital to real businesses and real economic outcomes. He has been tasked with developing these industries within the United States that are important to it from a national security perspective. The Office of Strategic Capital was allocated $200 billion from the Big Beautiful Bill. And so when you've seen the United States take positions or give investments to MP Materials, that's Steve Feinberg at the Office of Strategic Capital. when they took a equity stake in Intel. That's Steve Feinberg at the Office of Strategic Capital. Their name might not always be in the headline. They might not be mentioned in the body of the article, but behind the scenes, that's who's doing it. Now, but that's just a part of it. Them making direct investments is only part of it. That will continue. I'm sure it will continue, but that's only part of it. The bigger part of it is that they are going to then partner with private investment managers who have an expertise in allocating capital better than a government program. And they will match funding that is raised in the private market through government funds to then go develop these industries. So as an example, we have an opportunity where we're going to participate with a fund that is going to be making loans to small and medium-sized businesses in this area. And so, this fund will raise $1 billion of private capital. It'll get matched with government funds 2-to-1. So there'll be $3 billion that can then go and help develop these kind of cutting edge technologies, companies, natural resource companies, anybody that's in these designated areas that the government has singled out. So I do like it better than just somebody who's never managed a budget before handing out money. There will be real investor capital at risk that could disappear. And so I think doing it that way, when you have skin in the game, it makes it more likely that a good asset allocation decision is made. I have no doubt that something will go wrong somewhere along the way. But I was just right. It will not go perfect. But here's one thing I would say though, and I think this is important to remember. Is I think it's very easy to look at policies coming out of Washington and say, our senators and our congressmen and our presidents and our leadership is a bunch of clowns who don't know what they're doing and they could not manage their way out of a paper bag. I think it's very easy to do that. And in many ways, I would agree with you if that's your assessment. But what we're talking about here is the economic redevelopment of America. You're betting against the truck drivers. You're betting against the guys that work on the railroad. You're betting against the guys that are in a startup in their garage who are putting their whole life on the line to bring a product to market that otherwise wouldn't exist. You're betting against the guys that work in the factories, and you're betting against the guys that drive the dump trucks, right? And it's easy to say that the United States can't possibly win, but I would dare you to go in front of a group of any of those individuals and say that and see how that works out for you, right? Because I think the American heartbeat does still exist. And I think the people who actually do the work can still do the work. And I think it's very easy to conflate the people in Washington with the people in the trenches. And so if we give the people in the trenches an opportunity, I think that they're going to respond. And I think they may respond better than many people think that they will. Now, it doesn't mean it's going to be perfect, and I don't necessarily love the way this is all going about, but we do kind of need this economic renaissance in America if we're going to remain in our role in the world. And I think those who automatically dismiss its success are doing themselves a disfavor.
So many ideas popping in my head, but I did want to go back and, as a friend, Brent, and if you're doing this loan deal, let me just, we have this philosophical discussion within mining and mineral exploration about the dangers of being a capital lender to a pre-revenue exploration company. So
fair enough. I
just want to bring that to your attention.
Fair enough.
But so let's, and the part about, that American optimism, pulling yourself up by the bootstraps, being able to take risks and fail, that I 100%, 100,000% agree with you that still exists. And we need to provide people to take risks and fail. And that maybe goes back to the heart, our friend Mike Green wrote an incredible 3-part series recently that I'm not even going to try to summarize it because I'm not going to give it any justice. At the essence of it, he argues that the real poverty line is much higher than the $36,000 it has been since the 70s. It's actually closer to $140,000. And he breaks down some ideas of how to really change the tax code, not really equitably, but at least so everybody can benefit for all this. So what you just said about allowing the truck drivers, the machine shop workers to take risks and try things and maybe become those new entrepreneurs, as successful entrepreneurs continues to be really important. But it almost seems like we've kind of got to bring that lower middle class up to where they're comfortable taking the risk. Because I would probably argue right now, as you and I talk, Brent, they've been in a recession for years, and they just don't feel comfortable taking that risk because it's just too dangerous.
Well, I think you've nailed it. I mean, that's a big part of it. I think Mike called it the valley of despair, right? There's a point where you are maybe not quite totally at the poverty level, but you are making enough that now you're taxed at a certain rate, and the entitlements that you're obligated to spend on make you even worse off than if you were making less money, right? And to your point, I think, and many people may disagree with how he's going about it, but I think that's why Trump was elected. I think Trump tapped into that. I mean, you could argue pretty easily that Trump is a populist president, and populist presidents don't get elected unless the populace feels a certain way about certain things, right? And so I think what you just described about Mike writing, and the fact that we do have this potential, but also malaise, speaks to why the populist voices were loud enough that allowed Trump to get into office. Now, I don't know that we are going to handle this perfectly and that we're going to bring all of those people up into a better socioeconomic status. But what I do know is they're going to try, and they're going to try all different kinds of things to stimulate the market to do this. And again, so this is where I say I don't necessarily like where it's going to end up, and I don't like government getting more involved. But government spending is a tailwind. Whether we like it or not, it is a tailwind. And if the government's going to spend a certain amount of money in a certain sector, it doesn't guarantee that that sector is going to profit tremendously, but it doesn't hurt, right? Or at least it doesn't hurt in the short term. And so when I look around the world and I'm trying to decide, where do I want to allocate assets? Do I want to send money to Europe right now that is, it's got a war on its border? They seemed destined to want to continue fighting it. They've got green policies that have crippled their energy industries. And there's a number of different countries who don't necessarily get along, but have been, quote unquote, forced into a union. That doesn't sound like a great place to allocate capital to me for the next 5 or 10 years. When I look at China and the trouble that they're having with their real estate market that continues to deflate, and the fact that they have capital controls listen, the U.S. may have capital controls at some point, but China already has them. I don't know that I want to send a bunch of millions of dollars over to China and leave it there for the next 5 or 10 years. When I think about what the U.S. is trying to accomplish from a geopolitical perspective and from an economic perspective, I think that the Western Hemisphere, when I look at the board, provides the best opportunities. And I think it's going to be very volatile. I don't think it's going to be easy. I think it's going to be actually very, very hard. But I think there are going to be opportunities here. And those are the ones that I'm excited to try to find.
Can we pivot real quick? I want to ask you about Venezuela. Yeah. Because I do think, a lot of the attention to South America by Washington right now is really in partnership to kind of regionalize things. Huge endowment of minerals and energy. And the whole thing with Venezuela for the number of months has just been like, what the hell is going on? But at the essence of it, it was like, this is all about China. Somehow it's all about China. And now that this week, President Trump announced a blockade on sanctioned oil tankers out of Venezuela, which accounts for 4% of China's imports, Venezuelan oil. So this is more of a squeeze on China itself that has anything to do about Venezuela. It was just easy pickings.
we've written a lot of, and we've talked a lot about that this year, is that even when it's not about China, it's all about China. Everything the United States does anywhere in the world has some kind of a China angle to it. And the simple fact is, doing what again, I have to be careful. People think that I want this stuff to happen. I'm just trying to tell you what is happening and what I think the consequences are. So with Venezuela having the biggest, oil reserves, I think, in the world, certainly in the Western Hemisphere, and if not in the world, there was never going to be a situation where China and Russia developed those oil fields to their advantage and to the disadvantage of the United States, and the United States wasn't going to do something about it. That is just realpolitik at a very simple level. The United States was never going to let that happen. And so the fact that this is coming to a head now, it's kind of interesting timing, because, as you said, in many ways, it's about China. But solving the Venezuela problem solves many things for the United States from a geopolitical perspective. Now, it can cause problems too. I'm not saying that this can't cause problems, but it kind of kicks China out of the region. It puts a squeeze on their energy source. It removes a base of operations from them to be able to act further within the region. And it solidifies the Western Hemisphere as the United States' own territory. And it allows, if the United States solidifies the Western Hemisphere even more than it already is, it allows them to focus on some of the things at home that we've already talked about. Now, is it worth parking an aircraft carrier and potentially dropping bombs on them? Again, I hate to see that happen, but as just an analyst looking at the board, I understand why it is happening. And the other thing I would say is, I don't think it's just about Venezuela. So I live in Puerto Rico. There's been a huge uptick in military operations and military presence in Puerto Rico over the last, call it 6 months. I have a friend, this is anecdotal, but this gives you an example. I have a friend who he installs water sprinkler systems, from a fire hazard standpoint in corporate buildings. And he's probably got the biggest company that does this in the Caribbean. And the number of contracts that he is getting, new military-based facilities in Puerto Rico, is kind of off the charts. So this isn't like a 6-week deployment for them. They're building infrastructure and they're planning for the long haul. And I think the reason they're doing that is, Puerto Rico is a very strategic location, and they plan on being here for a while. And so what I mean by that is, I don't think it's just about Venezuela. I think it's about Central America. I think it's about Panama. I think it's about Mexico. I think it is about building Fortress America, which includes Central America and Canada and South America. You've seen in the last 6 months, you've seen, both Argentina did well at the midterms. Milei was his power was kind of reinforced. The U.S. bailed out Argentina from a certain perspective, which shows their commitment to South America. Chile has now gone towards elected a Trump sympathetic president. And I think that's what they're trying to do. They're trying to, start at the South and move up into northern South America and Central America, and reinforce, the Western Hemisphere as the U.S.'s dominant area. And I think in many ways, and I know I'm rambling here a little bit, but I think in many ways, focusing on the Western Hemisphere is smarter than focusing on other parts of the world. It does make sense to shore things up in your own backyard before you get involved in something halfway around the world or on the other side of the world. And I think many people, when the U.S., they put out a document a couple of weeks ago talking about this, and I think many people took that as a statement of retreat. The United States is retreating from the rest of the world and going back home because they didn't have any other option. And I think that's the wrong way to think about it. I think they are purposefully focusing on the Western Hemisphere. But what I think that then does is when they selectively choose to get involved in other parts of the world, they do it from a better position of strength rather than from an overextended network that is having trouble everywhere. So and it's for all these reasons that I think the United States continues to kind of outperform on a relative basis. And again, why I would want to allocate assets here as opposed to elsewhere.
Long-term outperformance, totally agree. Midterm, potentially even short-term, Brent, I see a lot of volatility.
Well, I can't disagree with that.
Yeah.
I think volatility is on the horizon. Yeah, I tend to agree.
I'm gonna try to. This is my last question, but then I have a very quick lightning round of questions to try to lighten things up a little bit for you. So,
Yeah.
but you put this all together. We have talked a little bit of industrial regime change. We've talked geopolitical pressure. We've talked a little bit of debt. My guy, right now there's social pressure, and just caveat, that whatever Truth Social post President Trump made about Rob Reiner, I can't believe that did more harm on his reputation than anything he's ever posted in 10 years. That is just wild. I mean, it was classless, but that alone did more damage to him.
I agree. He's his own worst enemy, right?
Oh my God!
For all his successes, he has an equal number of losses, and he continues to hurt himself more than anybody else hurts him.
Okay, so there is some internal political social pressure. What breaks? If something breaks in 2026, what's going to break? Is it going to be the dollar, the bond market, the equity market, just general trust?
Well, I think the area that would cause the most amount of trouble is if the bond market broke, and I don't rule that out. The government is not going to stop spending money. Whoever thought that they were ever going to stop spending money is delusional. Of course, the government's going to keep spending money. And I think if they continue to, and even though they're getting tariff revenue, which helps offset that, they're still spending a lot of money. And I think it's very possible that the bond market revolts in 2026. Now, the point that I have tried to make many, many times over the last several years is that I am not a bond bull. I believe the dollar is going to get stronger, but I don't believe I'm not a treasury bull. And in fact, it's treasuries losing value and interest rates going higher that I think causes the chaos, which causes the dollar to strengthen. But the point I really want to make is that the United States bond market going lower from a price perspective and higher from an interest rate perspective is not just bad for the United States. It causes chaos for the whole world because the whole world finances itself off of the 10-year treasury, or at least it uses it as a base rate. And so as interest rates in the United States go higher, and it causes, kind of a crowding out where available capital goes to finance the U.S. government rather than other global projects, it starves the system for liquidity. So I think so to your point, the bond market breaking or the bond market revolting, I think, is probably the highest likelihood event that causes financial market chaos.
All right. Let's try to have a little bit of fun. Covered a lot of it. I don't want to. It's the holidays. We got to try to have some sort of optimism. As much as the last couple of days have been kind of negative all around in the news cycle.
By the way, Stand by Me. By the way, is one of my favorite movies of all time, for forever and ever. Going back to Rob Reiner. I mean that's if you. I might watch that again over the holidays because it's just such a great story. Anyway, sorry for the tangent.
Remember his short part in Wolf of Wall Street?
Yeah, he was the dad, right?
He was the dad, and the phone would ring, and he would just lose his mind, and then he'd pick up the phone, and he was just the kindest man.
Classic.
Hilarious. Okay, rapid fire questions, real quick here before we get into maybe some thoughts on 2026 here, Brent. Okay, the dollar. Quick take, is the dollar the cleanest shirt in the dirty laundry or just the least torn?
Oh, it's the cleanest dirty shirt. Listen, it's dirty, but it's better. I would rather wear the least dirty shirt than the dirtiest dirty shirt.
Okay. If Washington, D.C. was running a mining company, would you invest in it?
Wow, that's a tough one. I probably would, but I would not like it.
You plug your nose?
Yeah.
Does the debt cycle end with a spreadsheet fix or just another chapter in the history books?
I think it's just another chapter in the history books.
If inflation were a tax, would people even recognize they were paying it?
Well, I think inflation is the most regressive tax of all. And again, I would argue the reason Trump is in the presidency is because that tax got out of control back in the early 20s.
Okay. 10 years from now, will owning metals look like a genius move, or be like owning beachfront property right before a hurricane?
Will look pretty smart.
Yeah?
Yeah. 10 years from now, yeah, I think it'll look pretty smart.
All right. Awesome. Okay. All right. Your thoughts, 2026, challenges ahead of us, but maybe something to be optimistic about.
Well, so I think, here's the thing is, I'm usually not against making predictions because I don't really care if I end up being right or wrong, right? Like I'm gonna react pretty much the same. Hopefully I end up being right. But I only don't have any big opinions right now. If I had them, I would happily tell them to you. I have a friend who doesn't trade and doesn't do any investments the last 2 weeks of December and the first 2 weeks of January. And he says part of the reason is because the last 2 weeks, everybody's just trying to clean up any messes and get rid of any, or lock in any profits. And then he says the first 2 weeks of the year is kind of for amateurs who are all excited and just can't, sit still. And I actually think that that's pretty good advice. It's not to say that there won't be opportunities early, but I'm kind of at the point where it's been a pretty good year for everybody. Doesn't really, if you were in, anything, asset-based this year, you probably had at least a decent year. And I think there's a time to make money and there's a time not to lose it. So I think the time to make money this year has already passed us. I think for the next 3 or 4 weeks, it's probably a good opportunity not to lose money. So just be careful. And then I'm going to have to just reassess early January and kind of see where things go. But what I am most optimistic on is I think, as I mentioned during the thing, I think it is going to be extremely volatile. And I do not think it's going to be easy, but I think there's going to be more opportunities in the U.S. and in North America than many people currently give it the opportunity for. So, and I'm excited to try to figure out what those are. Doesn't mean it's going to be easy. It doesn't mean it's going to be broad-based, but I think there are going to be some really good opportunities in 2026. And so trying to figure out what those are and profit from them is what I'm going to be focused on.
Awesome. All right. Brent, well, Feliz Navidad. Are you staying in Puerto Rico for the holidays?
Yeah, we're going to be here through Christmas, but then we're going to go to Washington, D.C. for 4 or 5 days in between Christmas and New Year's and just kind of do the tourist thing. So it should be fun.
Don't you ever just miss like Midwest brutal cold winter Christmas? Like maybe a snowstorm?
we were just back in Kansas over Thanksgiving. Had a fantastic time, and it was cold.
Yeah.
We went out and you'll laugh at this. Some people are going to roll their eyes, but I took my son's 17 and we took him out and he shot guns for the first time. And so we had him shoot a pistol, a shotgun, a rifle. And so it was a very Thanksgiving, Nebraska/Kansas Thanksgiving for me. Cause that's what I used to do. Every Thanksgiving we would go back to my grandparents and we'd go hunting and, it'd be freezing outside and then you'd come back inside and watch a football game or a basketball game or something. So it was a pretty traditional Thanksgiving for us this year.
Amazing. Sometimes those traditions just, you want to keep them traditions. You don't want them to go away.
That's right. That's right.
Brent, thanks so much. Good to see you, man.
You too.
Greetings.
Merry Christmas.
Merry Christmas. We'll talk to you again in 2026. Well, that, I guess, is becoming a wrap here. 2025 on Mining Stock Daily. In another incredible year, 8th year publishing this podcast, and I just can't thank everybody enough. So I should probably attempt to and start. A special thanks to our partners of the pod, all the companies who allow us to continue to cover this sector and bring those important stories to the investment community. I personally would like to thank Carla, Ian, Mike for joining me on the MSD endeavor. And on the Clear Commodity Network side, the growth on the new platform couldn't have been better. If you haven't yet, please visit us at clearcommodity.net. I have an incredible amount of gratitude for Corey, for Ted, Rory, Justin, Chris, Matt, and Jenny for seeing the vision of what is ClearCom and supporting it with your insights each and every episode of all the content that we published. But to try to wrap things up here this holiday season and end the year, tried to write a little bit of a poem. You'll probably recognize it to the tune of The Night Before Christmas, but we're going to call this the Night Before Mining Stock Daily. So stay tuned. All right. 'Twas the year end of Mining Stock Daily, and all through the street, not a trader was stirring, not even a tweet. The drill rigs were parked in the core shacks with care and hopes. These high metal prices will continue to be there. The geos were nestled all snug in their desks, reviewing assays from Yukon to Quebec, and I, with my mic and a platinum-stained cap, had just settled in for a year-end recap. When out of the markets there rose such a clatter, I opened the charts to see what was the matter. Away to the Bloomberg I flew like a flash, tore open the tape and scanned the CME copper price crash. Gold pushed new highs, defying the Fed, with investors stacking ounces like holiday bread. Silver broke 65, then danced back to 60. Volatility, lively, enthusiastic, and flirty. Copper stole headlines, the star of the play, as electrification dreams carried it past $5.20 a pound in May, with Freeport Tech and juniors alike still warning the world there's not enough supply, so just take a hike. Uranium surged too, with utilities in a bind as Cameco and Kazatomprom realigned. Spot touched the $125 mark with cheer and a gift you bugs had been wishing for all year. In Canada, the mood turned both cautious and bright, with takeovers dancing like elves through the night. The Great Bear DNA resurfaced again as explorers hunted Tier 1s from Red Lake to Timmins. Agnico expanded its northern dominion, consolidating ground with every investment decision. Newmont slimmed down, selling assets with tact, refocusing gold output with a long-term impact. The Yukon was buzzing as new discoveries grew. Sitka, Banyan, and Snowline all show what drills can do. And British Columbia's copper belt shined anew as collective funding pushed long-awaited projects through. Meanwhile, in the U.S., the winds shifted fast as domestic supply chains matured at last. The DoD, or DOW, what will, doubled down on critical minerals, backing rare earths and graphite, once wholly ephemeral. MP Materials, Energy Fuels expanded too, signaling America wants its materials domestic. Thank you. Idaho and Nevada saw exploration heat as cobalt, silver, and lithium found new feet. And Arizona's copper mines, old giants revived, proved the Southwest heartbeat was very much still alive. As December winds blew and Q4 came near, it was clear this odd year left its mark on the sphere. Financing was pretty easy, yet discoveries shone bright and royalties kept stacking like stars in the night. So we pause now together, this merry crew, to thank listeners, readers, and every interview. Your support keeps the lights on, the insights in flow, and makes Mining Stock Daily the place miners go. Now onward to drilling, to guidance, to news, to breakouts, to budgets, to 43 101 reviews. May your ounces be growing, your catalysts steady. Merry Christmas to all, and 2026, we're ready. Merry Christmas, everybody. Happy holidays. Thank you so much for your continued support and listenership throughout the year. We're going to be off the next couple weeks and be back early January 2026. Thank you so much. Be well.